Welcome back to my channel. If you are new here, press the subscribe button right now. If you're not, welcome back to my channel. It is Natisha Turgerson, aka Miss Make It Happen, aka your real estate doll, here to bring you all of the facts that you're going to need to start the home buying process. Let's get into it. If you're watching this video, of course, I would assume that you are looking to buy a house. So we're going to start you off nice and easy. This is going to be a series of things you will need to get to the home buying process. Why? Because I love to guide you. A lot of people view real estate agents as sell people, and I do agree with that to a certain extent. It all just depends on who that person is and how they run their business. And I say that to say because typically a salesperson is somebody that's trying to hassle you. You know what I'm saying? Like they're trying to make you do or talk you into something. I am trying to talk you into home ownership. I am trying to talk you into buying a house. Now, this is where I said we differ, just for the simple fact of I'm not going to talk you into buying a house, a specific house. I'm not going to, you know what I'm saying? I'm not going to like hassle you, like force you into this, because I don't have to live here. You do. You get what I'm saying? So it's like I'm going to give you the facts, the pros and the cons. Now, sometimes it may come off like, okay, she's trying to sell this particular house to me. No, I'm just on the outside looking in and knowing your options, and this is the best option for you. You get what I'm saying? So it is what it is. But anyway, that's not what we're here to talk about. Let's get into this video. 5 things you need to know when starting a real estate process or trying to buy a house. You don't know where to start. We're brand spanking new here. Your first step is to change your mindset. And when I say change your mindset, you need to view home ownership as not as a debt, not as something that you're just doing because you're able to. And I have had clients do that. Like, I'm buying a house because I have a good job. Like I meet all the requirements, so I'm just gonna do it. Like, why not? People tell me like this is what I should do. Like, why not? You need to have a good mindset and understand this is an investment. And the reason being is when you go into stuff with the wrong mindset, you later on have regret. We are not here for regrets. We're not here to what I shoulda, coulda, woulda did. Okay? Understand that buying a house is an investment. If you're not buying a new construction house, if you're buying like a lived-in house, like a used house, understand this is not your dream home. Like, it does not have to be your dream home, especially as a first-time home buyer, and that's really who I'm targeting, somebody that absolutely is new to the process. It's not going to be your dream home. This is an investment. This is your stepping stool. This is your foot in the door. Like, understand this is not going to be perfect, okay? Especially if you're not buying a new construction. And the reason I say that is because everything in a new construction, not everything, let me take that back. Most things with new construction are still under warranty because it's just got in the building. Your appliances, like some builders have 2 to 10 warranties where they're like structural warranties, your roof, if shingles come out, yeah, it's different things. In a used house, you really don't have that unless the seller has it and it's transferable to you, which is a plus. But at the same time, understand this is just your starter home, okay? Once you understand that, you will look at something completely different. Understand home improvements are going to need to be done. Everything is not going to be done when you get there. Like, you're going to have to do home improvements, guys. If you want stuff like it, like, okay, boom, you tell me you want a 3-bedroom, 4-bedroom, 3-bath house, a certain square footage, and and then the light fixtures aren't what you want. Home improvement. Get an electrician, change the light fixtures out. Make your house into a home. Understand that you need to make your house into a home. Okay, the house has a deck on the back, but it's an old deck. It needs to be replaced. That should not be I'm not going to say what should be because I can't be the judge of your wants and needs, but I wouldn't make that a deal breaker for me because it's still operable right now. Yes, I don't like the way it looks. Home improvement. That's something that you can change about the house. You get what I'm saying? So don't let certain things keep you because you want everything lined up perfect. It's not going to be, babes. It's not going to be, okay? So now that we got that understood, let's move forward. Mindset. Understanding that this is an investment. This is your foot in the door. This is how you are going to start your generational wealth. Whatever the case may be, have a good mindset. Second, you're going to need to get pre-approved. You need to get in contact with a lender. Normally, people say get in contact with the lender first. Yes, if you come to me as a real estate agent and you are already pre-approved, I'm going to be excited because I know we can go and hit the road. We can go and start get the ball rolling. But If you don't, that is okay. That is okay. And honestly, sometimes I prefer people come to me without it, but still like able to get it so I can help you and refer you. Reason being, and I've had this happen a lot of times, people go to like their regular, but not saying anything bad about these companies, but like these corporate people or people that's like out of state and stuff, a local lender, now this is what I will say and stand by, a local lender is going to serve you 1,000 times better than some like a company online. Yes, sometimes they'll have like a designated person or like call center person that's dedicated to just your file, but at the end of the day, you don't, the processor doesn't know your loan officer, like these people are in different areas. They're just like, it's like a, you know, like a assembly line. It's nothing that's customized to you. Not that people are going to take time. Some of these companies are banks and credit unions and stuff, they don't even like help you do the down payment assistance. You have to go to these other outside sources, get approved for the down payment assistance, then bring that to the lender, and then they do all that. Local lenders, the local lenders I work with and I can speak for and vouch for, it's a one-stop shop. You go there and apply for your mortgage loan, they're also getting you approved for these down payment assistance program, all there together. It's nothing extra that you have to do. They're doing all the legwork for you. It's more personalized for you, more personal basis, and it's somebody that you can actually see and trust. I always promote local lenders, okay? That is the second step. Once you get your mindset together and you feel like this is something that you want to do, you're ready to start this for you, your family, whatever, your second step is going to be getting in contact with a lender or your realtor. I'm going to say your realtor because I can help you. I can guide you. I know exactly where you need to go. Not you trying to do stuff by yourself. And a lot of people try to make it seem like, I'm getting off topic because that's a whole nother topic. We'll talk about that another day. So yes, get in contact with the lender or either your real estate agent, and your real estate agent can get you in contact with the lender. That's your first step. Now, what do I need before I get in contact with the lender? What does this process look like? I'm not going to go too in depth into the mortgage process just because that's a whole other topic on its own. But I will tell you, once you have an initial conversation with your lender, and they're going to need you to do an application, so of course they will pull up your profile and let you know what we're looking like or what you're looking like, what you need to do. You're going to need an ID. Some lenders will let you do an application and not really require any documents until after the fact. But for a lender that's going to actually be giving you a solid number, like they're going to need it, like this is still documents, whether they require it up front or later, it's stuff that you need to have. And then if it changes, like okay, say last 30 days worth of paycheck stubs, and then 2 weeks later is when you're actually trying to get like an actual pre-approval, but you already uploaded that, like you'll have to re-upload like the updated paycheck stubs, like stuff like that. But to start off, you're going to need your state ID. If you don't have a driver's license, it can be a driver's license. If you don't have one, it can be a state ID. You're going to need some form of identification, okay? Passport, whatever, your state ID. Then you're going to need your last 2 years worth of W-2s. You need to have 2 years worth of work history. Not 2 years worth of bounce around history, 2 years worth of work history. Not 2 years worth of training history, meaning that you went to one job, got through the training, quit that job. You need to be consistent. They want to see that you've been on somebody's job for 2 years. Now, are there exceptions with this? Absolutely. Absolutely. I've had somebody get a pre-approval, and one of her years or one of some months out of her years, she wasn't really working full-time. She was working part-time because she was in nursing school. They were still able to get her pre-approved. I've had somebody else where she was working at one job, but the job ended up shutting down and she ended up getting a job somewhere else, but there wasn't like a major gap in between. She was able to get approved. Like there is scenarios, but you will not know if you do not start or get connected with a lender. Stop thinking that you are your own person and you're talking yourself out of something that somebody could work out for you, okay? You're talking yourself out your blessing. Let's start there. Secondly, ID, work history, which is W-2s. They're going to need your last 30 days worth of bank statement, 30 days worth of paycheck stubs, okay? They want to see how much you're getting paid. They want to see that you're getting paid consistently. Like, they want to see. So, one thing I will recommend, and this is something recently, my first time I was really dealing with it, which really, it's like one of those things you never really thought about, but you know, once it happens, you're aware of it. So, I had one client that she just came off of vacation. She wanted to start the process, but she had just came off the vacation, meaning her last 30 days of paycheck stub did not show anything. Like, she was on like an extended vacation. Not 30 days, but like she got paid weekly, I believe, and like last 2 weeks. So it really only like she had like half of a month's paycheck stubs when she's making 2 times that amount. You know what I'm saying? So when you do, around the time that you can, make sure that you're actually working. Like, even if you can get overtime and run that money up, do it. Do it. If you can run that money up, if you can hit some overtime, so your paycheck stub last 30 days can reflect that, do it. The only thing I will say to be mindful of is that when you do your application and you done killed a whole bunch of overtime showing a specific range of what you're making monthly, by the time you buy your house, you're going to have to submit updated paycheck stubs. So be mindful of how your time frame is going, so you will know to still do what you was doing when you originally applied, to show them that you can still afford to do this. You get what I'm saying? Don't run a whole bunch of money up so you can get this high pre-approval or a good pre-approval. Then once you find a house in that range and your updated paycheck stubs, you're not making no money. So now they're like, what was you doing back then? Like, these ain't reflecting. Like, this is a big difference. Be mindful of that, okay? Be mindful of that. So, ID, work history, paycheck stubs, bank statements. You need to have a bank account. Have a bank account. They will need your last 2 months worth of bank statements, and that does vary depending on your profile, but typically it's just the last 2 months worth of bank statements. Make sure your bank account has like consistent deposits. They want to see what is being deposited into your account. And I'm not 100% sure on this. I feel like I have heard this before. They also want to look like all of your money is being taken out. Like, you can't have $5,000 in there and then you having $5,000 worth of debits. Like, they want to see, like, when your balance is reporting that some type of money is in there, because it's like a reserve. Like, they want to see that you have money. I'm all for the cash dealings and, you know, whatever, but you need to open up a bank account and put your big girl or big guy pants on and put that money in the bank account so you can have something to show for something. Okay, get your bank account. You're going to need your last 2 months worth of bank statement. Let's move on. All right, so once you have all of these items, you should be good to start the process. You already will be good to start the process, because you, like I said, a lot of them will have you do the application. They'll take a look at the credit score, and then if everything looks good there, they'll have you submit those forms so they can give you something solid. Now, I know you're actually wondering, well, you didn't say anything about a credit score. Credit scores can vary, and honestly, I'm going to say that because if you hear people say that you can get a house with a 580 credit score, that is correct. You can. A lot of people do not. They'll have a 580, but they don't want to apply or nothing because they want to get it higher because of what different things they've heard, etc., or the interest rates, all of this stuff. My response to that is, yes, your credit score will affect your interest rate. Let's start there. Yes, it will affect your interest rate, but if you are doing good negotiations, you can still have that interest rate lower. Like, don't think because you have a 580 credit score and you got pre-approved for a 580 credit score, you have your down payment to get the house, like you can financially afford it, but you don't want to do it because of the interest rate. Babes, when we find you a house, we can negotiate you some sort of concessions and work with your lender to see how much you need or how much we can get you to buy your rate down, and you can still get a lower interest rate, or you can be okay with that interest rate if that fits your monthly payments or everything that's you know what I'm saying, your situation. And then, of course, I know you've heard you can refinance, but understand that your realtor can negotiate in your offer some seller concessions that your lender can use to buy down your rate. Okay, so you can still have a 580 credit score, have your down payment money that you've been saving up, and still get in this house with a decent rate because you use seller concessions to buy it down. I would do a whole other video on seller concessions if you do not know what that is, but just know that it is tea. Okay, so that's that. Credit score 580. I always recommend, I tell people, yes, you can get pre-approved with the 580, but I'm always going to recommend that we get you to a 640. Hear me out. A lot of my first time home buyers or people that's coming to buying a house, they don't really know how much money they need to save up to do this. And a down payment with one of the most commonly used loans, FHA, is going to require 3.5% down. Now you may ask, what dollar amount is that? That will vary based off what house you get. So I'm going to do some quick calculations for you just so we can see. Okay, so I'm going to do 225 just because we're selling new construction homes right now. With a builder, that's 225, 3-bedroom, 2-bath, 1173 square footage on a 1/4 acre of land. All appliances included. Hit me up if you want to buy one, if you want more information. But okay, so I'm going to do 225. 225 times your 3.5% equals $78.75. So that's how much you will need for your down payment. This is not including closing costs. So if you're buying like $78.75, it may not sound, I don't know how that sounds to you all, depending on your situation, but that's really not a lot of money to move into a house, guys. Especially if you're like buying like around tax season, or you save your tax money, like whatever, that's not a lot of money. If you can get a gift from a family member, that's not a lot of money to get you in a house. Now that is just your down payment. Now the reason I say we need to get you to a 640 is because 640 is the limit where a lot of these down payment assistance programs will need you at in order for you to qualify for down payment assistance. Now some of them are income based, meaning you have to make less than a certain amount to be qualified for them, because it's like, you make $100,000, $20,000 a year. What is you applying for? Like, this is for people that actually need it. You know what I'm saying? Like families, like to get you into this house, to help you get into this house. So if you're at a 640 and we can qualify you for a down payment assistance, this is a game changer. Down payment assistance program like Florida Bond, Hometown Heroes here in Florida, like all these programs, they have like up to $25,000, up to $35,000 of money they will give you to help you move into your house. You get to a 640 credit score, you can get these down payment assistance, and you can be paying little to no money out of pocket to get into this house. Meaning you will pay for your inspections and stuff, but once you get to, like, when it comes to the nitty gritty, like closing costs and down payment, you will not have to pay this, y'all. And majority of them are these will be different. So when you talk to your lender, you ask them what are the particulars of the program that you're going to be using. But majority of them are a second mortgage that just sits in the background like this. You pay your mortgage payment, what's going to include like your principal, interest, your taxes, and your insurance. And that second mortgage is just sitting there. Like, it's just sitting. Like, you won't have to pay it back unless you refinance the loan, which you'll be taking out of your equity, and it'll be paying like that, like still not coming out of your pocket. Or if you sell the house, and then again, it'll be taken out of your proceeds, not out of your pocket. You know what I'm saying? So it's never you actually having to dish out any money. So that's why I always recommend people like 620 to 640, just for the simple fact, because if we can get you down payment assistance, and you can, even if you have the 78.75 to move it to the house, if we can get you down payment assistance, why not keep that and use that for any home improvements that you may need, any new stuff like new furniture, like stuff that you and your family is going to need. Why not? I will tell you one reason instantly that may be a game changer. When you do use the down payment assistance programs, they dictate the rate. That's the one downfall of it. They dictate the rate. So as far as us talking about certain concessions to help buy down the rate or anything of that sort, if you use down payment assistance, you're not going to be able to do that. They'll dictate the rate. But it still is going to be like, what I have seen is still the market rate. Like 6%, like stuff that's already like the market rate. If the market rate is low at that time and they dictate it as that market rate, it's still a win-win. Like a win is a win. A win is a win. Even if I can get into this house for now and then wait 2 years and I want to refinance, I can pay my equity that I've gained in them 2 years. I'll pay that down payment assistance off, and I can get me an updated rate, and I still got the house for a cheaper price. You get what I'm saying? Because $225 now, if rates and stuff start dropping and changing, the price of that house is going to go up. So now the house that I could have qualified for 2 years ago for $225, now that house is $300,000, and I cannot qualify for that. So now I've waited and for interest rates, etc., and you can't even get the money to get it no way. You know what I'm saying? So this is what you need to think about when it's time to buy a house. So other than that, guys, I don't want to give too much information in one video, because like I said, this is going to be a series, so we can help guide you to home ownership and get you to where you need to be. So if you want to hear more from me or have any questions, comment down below. And if you want to hear more, please subscribe to my channel, thumbs up this video, share with a friend, or anybody that needs to be a homeowner in this next season, guys. I'm speaking it over your life. This is your season 2025. We are guiding you to home ownership. If you're in anywhere in Florida or Merritt County area, contact me at 352-497-7868. Again, my name is Natisha Tuggerson, and I am here to make your real estate dreams come true. You can call me your real estate soulmate, okay? AKA make it happen. Bye, guys. Thank you for watching.